For more on what is next for stocks, let's bring in Morgan Stanley Private Wealth's Katerina Simonetti. Katerina, great to see you a day like today to cap off a week like what we've seen. What's your take? What do you tell clients right now about this torrid run we've seen off the bottom?
Well, where do we start? This was such an eventful week, to say the least. And of course, to us, what we tell the clients is that we have to hope for the best, and the investors seem to undermine the risks of the market and seem to just really move over the uncertainty. And that's what we're seeing with the Strait of Hormuz situation, that we take the news every day as it comes. And of course, today, the indication that the activity in the Strait would reopen is fantastic. We see this in appreciation of the stock prices and the decline of the oil prices. But this does not necessarily mean that we're out of the woods. At the same time, we believe that it's an incredible buying opportunity. In our view, this is a bull market, and this is a correction within the bull market. So investors don't necessarily need to wait for all clear to bring some risk back into their portfolios.
So you think this is just part of the upward slope that we're going to see continue? What is sort of the asterisk to that notion?
What we see is really like that quintessential correction, because you see on one side, decline of the valuations. On the other side, the earnings are continue to move up, and the earnings expectations are continue to move up. So in that respect, we are expecting the recovery from this correction once the good news come. And as we know, the recoveries are usually really quick. So we want to make sure that we don't miss it by being too defensive, not even defensive, but staying on the sidelines in cash, not being invested in appropriate asset classes here.
What about rotations? I mean, the Mag 7's had a really nice bounce, partially because of their great cash flow, but are you looking at other things now that have maybe not as good balance sheets, or how are we thinking about allocating money?
Well, markets like this bring remarkable opportunities. This is the time where we go in and we pick up some of these individual securities that have been undervalued and, build up a nice, portfolio and fill in the sectors opportunistically, right? Like this is where we can look at sectors like financials and industrials and healthcare and take advantage of the buying opportunities. Like, energy today would be a great way to, add to the portfolios for sure.
So, Katerina, the only way to beat on the indices is to go out a little further on the risk curve. You mentioned it before. Now is the best time to actually go out on a risk curve. What do you, from your seat, view as going out on the risk curve?
I think that what we're seeing right now is these geopolitical risk coupled with a really exciting time in the markets driven by the increased multiples driven by AI. And we're moving into this phase 2 of the AI implementation, right? Like we build up the technology. We have it in place. Now we get to sit back and watch the actual results of this technology and how it's going to increase the profitability of the companies here. So as we look forward, the indices are best positioned to give us that long-term participation. Meanwhile, the declines in the market like we see right now, the market corrections, give us buying opportunities in individual sectors and individual securities.
I noticed tech and communication services, your equal weight, and that's actually led us from the bottom. You think they're fully valued at this point?
Absolutely. There's still opportunity there. They're valued at this point. It's probably not the most exciting buying opportunities there. We see a lot more in financials, in healthcare, in industrials. At the same time, we also are trying to tell investors that being opportunistic and being offensive, it's not necessarily, trying to chase the returns, trying to chase Mag 7, but identifying companies with pricing power that are able to create revenue, even if demand for their services is coming down, even if the consumer sentiment is a little bit lower than we're expected it.